Hey everyone, welcome back to our On the Money YouTube channel powered by Allied Wealth. Matt Stevenson here. And today I wanted to touch on one of the biggest questions that we get in building your retirement plan. Do I need a long-term care policy or not? Now, there are a lot of things to consider when we talk about long-term care, but one of the very first things I talk about is how expensive these policies have gotten over the years. Here I've got a few comparisons to some other things like minimum wage, median income, a new car, a new home over the last 40 to 50 years. And certainly we see something like a new car or a new home has grown exponentially in cost over all that time. But above and any of those, the cost of long-term care is almost 2,000% more than it was in the 70s and the 80s. That is an astronomical amount of cost, and it's something that we need to consider when figuring out whether we need to pay this extra cost and premium every single year. Now, think about it. There are a lot of stats here that we're going to talk about quickly, but about 2/3 of you might need and use long-term care at some point, whether that's assisted living, nursing home care, home health care. In some way, 2/3 of you will use this long-term care over the course of your lifetime. And on average, that care is going to last anywhere from 12 months to sometimes 36 months or 3 years, perhaps even longer than that. And so as we think about those costs that have increased significantly over that time, this starts to add a lot of burden to your retirement accounts and your portfolio to make sure that we can account for that cost. In fact, the average cost per year is now $80,000 to sometimes $100,000 or more to cover these long-term care expenses. And if we're talking about 1, 2, even 3 years of cost, that can be upwards of $250,000 or more that we need to have set aside out of our nest egg to make sure that we can account for this. Now, at the same time, we've seen the providers of long-term care insurance shrink. It's a market that has become very compacted over the last several decades. There used to be over 100 carriers of long-term care, and now that number is about a dozen. And so with less competition, that's another reason why we've seen these premiums increase so much over these last several years. Now, when we think about a long-term care policy, that's becoming quite expensive in its own right. 3, 4, 5,000 every single year, and that's when we're on the younger side of that, in our 50s and 60s. Think about when we might actually use these long-term care policies, perhaps in our 70s, 80s, and 90s, how astronomical that cost will be. Now, why is that? Because when you buy a long-term care policy, generally what will happen after the first several years is you'll start getting a letter in the mail. Hey, in order to keep the same benefits, we're going to raise your annual premium, or if you want to pay the same premium as what you currently are, we're happy to cut your benefits. No problem at all. So which awful decision do you want to make about your long-term care policy? And they're going to start getting more and more correspondence like that, to where when you need these policies the most, they become so astronomical in price that I see a lot of people ditch the policy altogether. And so that's where the question comes in. Do I need a long-term care policy or not? Because these premiums won't stay the same forever. They're going to increase with age, and one of the main things that we've got to figure out and really quantify in building a plan is, can I afford to self-insure through the assets that I've built without needing one of these extra long-term care policies? And so if we think about that average cost point over 2 to 3 years of $200,000-300,000, perhaps a bit more than that, if we can maintain our lifestyle comfortably over that 20 to 30 years in the most important years of our life and still have that much set aside later on in our plan to cover these potential expenses, then we might have a plan to where we can self-insure and not have to buy one of these extra policies. But that's where it comes down to the planning. We've got to understand what our assets can produce for us and making sure that works consistently and reliably over the course of time so we can start to answer these critical parts of making sure that your money's doing exactly what it needs to do in the most important years of your life. Folks, as always, this is one small piece of understanding how to build your retirement plan. If you've got more questions on this, check out the rest of our content on our YouTube channel. And if you like this video, hit the like button below and make sure to subscribe for more content to come. We'll see you soon.